Now let's talk about the Japanese yen. It is going through a rough time. Its value against the US dollar has declined sharply in the last 3 years. The yen has lost over a third of its value. And on Monday, it dropped further. $1 was worth around 160 yen. This was the Japanese currency's weakest position since 1990. So what is happening to the yen? If Japan is the world's fourth largest economy, an economic powerhouse, why is its currency so weak? The reason is the United States, more specifically, the interest rates in America. Take a look at some numbers. What is America's interest rate? Anywhere between 5.25 to 5.5%. What about Japan? Less than 1%. In fact, 0.1% to be precise. That's the rate in Japan. Now think from the point of view of an investor. If you had a large sum of money, say $1 million to invest, where would you take your money? Would you take it to the US, where you'll earn over 5% in interest? Or would you go to Japan, where the return is next to nothing? The choice should be clear. The US offers superior returns, so that's where the money is going. Investors are selling their yen-denominated investments and buying bonds with US dollars. So effectively, this is a swap, the yen for the dollar. And this is why the Japanese currency is losing value, because investors are dumping it. So what is Tokyo doing about it? It is trying to defend the yen.
The extreme and abnormal fluctuation caused by speculation and its negative impact on the national economy cannot be overlooked. Therefore, we would like to continue to take appropriate actions when necessary.
Tokyo is being cagey with the details, but Japan's central bank did make an intervention this week. It is called the Bank of Japan. It dipped into its reserves and bought large amounts of yen. The specifics have not been made public, but the yen has shown some recovery. Today, the price of $1 was around 157 Japanese yen. So the Bank of Japan may need to keep fighting, although it rarely intervenes to protect the yen. Do you know when was the last time they stepped in? Back in 2022. That's when Japan spent $60 billion to defend the yen. The bank's first intervention in 25 years, 2022. And what was the price of the yen back then? 146 against the US dollar. Today, even after the central bank's intervention, the yen is much weaker, and in the days ahead, its value may decline further.
If underlying inflation moves in line with our forecasts, we could adjust the degree of monetary easing. But we think easy financial conditions will be maintained for the time being.
That was Japan's central bank chief. He was talking about interest rates, and he plans to keep them unchanged, below 1% for the foreseeable future. So investors have every reason to rethink, to look for options beyond Japan. That's the first potential fallout. And how will this affect the people of Japan? Their imports will become more expensive. Tokyo's biggest imports are crude, natural gas, and integrated circuits. If the yen weakens further, all these imports will become more expensive. But there's also a flip side to this. For some people, a weaker yen could be beneficial. Like the exporters of Japan, they will earn more by sending the same amount of goods overseas. Also, tourists stand to gain. If you've been meaning to visit Japan, this is the best time, especially if you're American, or just anyone really carrying American dollars to Japan. You'll get more out of your money. But overall, the signs are not looking good. In March this year, Japan narrowly avoided a recession, though there is still a feeling of economic distress there. Look at this headline. Japan has 9 million empty homes. And why is that? Because there are no buyers. Apparently, foreigners are now showing interest. They want to invest in these properties, which brings us to another question. Is it time for Japan to think about a shift, perhaps allow more foreigners into the country? Considering the current state of affairs, it won't be a bad idea to consider.